Boom shakalaka, what is going on everybody? Randall here from Crypto Love. Today's episode, we are going to be talking about my favorite indicator, the MACD. In particular, we will be talking about what is the MACD, why I use the MACD, how I found out about the MACD, what settings I use on the MACD, and how I trade the MACD. So if you want to go ahead and find out that stuff, then definitely stay tuned for today's episode. All right, welcome back, guys. It has been a long time since I've seen you. There's a good reason for that. My channel got another strike, so couldn't make any content for a week. But I am back, and a lot of you have been asking about how exactly I trade the MACD, the 2 hour, the 1 day, the week, which different ones, how I trade them. Do I margin trade them? Do I go on leverage? Do I just go back and forth? So, whole bunch of questions. I want to answer all those questions for you today. So we'll get into things. Now, to begin with, this is the MACD down here on the bottom, all right? Now, back in the beginning of 2018 was when I first really discovered the MACD because I was, before then I had only been an investor. I started trading at that point at the beginning of 2018, and I wanted a simple strategy that I could use that would tell me when to buy and when to sell, because generally with trading, the time to buy is when you feel like you want to sell, and the time to sell is when you feel like you should buy. I mean, we all know that, the FOMO and FUD. So I was just messing around with different indicators, looking at Bollinger Bands, moving averages, all these different things. And I came across the MACD, and this one really stuck because I was taking a look at things and I was like, damn, if I just traded on that alone, I would be doing pretty well. As a matter of fact, had someone back test it, and it looked like you could get 69x gains over 2 years just using the MACD alone. Now, what exactly is the MACD? Well, it's these two lines and this histogram down here. Now, these two lines, there's a blue line and an orange line. I just leave it on default settings. So how you find it is you go up to Indicators in TradingView, you click on Indicators, you type in MACD, and the first one that comes up, that's the one you're going to use. Now, I'm not going to select it because I already have it here. But if you take a look at it, we have a blue line and an orange line. Now, these are the default settings, 12, 26, close 9. That tells me that the MACD line, which is this blue line, is the difference between the 12-day and the 26-day MACD, or whichever period you're using. This is the daily chart. So the difference between the 12 period and the 26 period moving averages on the close. And then this orange line, the signal line, that's a 9-day smoothing of the MACD line. Now, what does this actually give us? It gives us these crosses, and that's really what I'm interested in the MACD is these crosses. These crosses tell me exactly when to buy or sell Bitcoin, and they're what I've been trading on since the beginning of 2018, somewhere around, it was around this point, around March of 2018 was when I started trading on them. And while it has done for me a lot better than just holding Bitcoin since then, it hasn't gotten me the 69x gains that I was hoping for. So obviously, do your own research. The thing about it, I'll say this about everything, is to be consistent. So you don't want to go changing strategies. You don't want to go and first off, this isn't financial advice, okay? This is just my experience. I'm sharing my experience with you. Do your own research. Obviously not financial advice. Trading is risky, blah, 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 blah. But you want to be consistent. There's this book, The Way of the Turtle. The whole entire book, you don't have to read it because basically it comes down to if you want to be a good trader, find a profitable strategy, stick to it regardless, okay? So what are we doing with this? Well, there's a cross when the blue tucks under the orange, and there's another cross when the orange tucks under the blue. Those are the two crosses. So those are the times that we're going to buy. So basically when the blue line is on top, when the MACD line is on top, want to be in Bitcoin. When the orange line is on top, want to be in a stable coin. Now some of you ask, can you margin trade this? And yes, one of my friends did do this and he was doing it pretty successfully. I, however, don't like to do that because I feel like the Bitcoin markets are traded so thinly as it is. And with margin trading, it's very, very risky unless you know specifically what you're doing. I'll share with you later how you can learn margin trading better if you did want to do that. However, I don't recommend it because with margin trading, you can get liquidated and lose everything. Whereas with just basically hedging back and forth between Bitcoin and stable coins, yeah, you might lose a little bit because maybe you were in Bitcoin when you shouldn't have been, but you're not going to lose everything. So that's what I've been doing. I just go back and forth between Bitcoin and stablecoin. I don't mess around with margin trading because it's freaking risky, dangerous, and people who tell you to do it, unless you're a professional trader, unless you're willing to lose everything, it is stupid. So let's get into some other stuff. So basically, just want to be in Bitcoin when the blue line is above and stablecoin when the orange line is above. Now, why? Well, particularly if we were looking at this chart here, all right, when there's this cross right here, okay, this says go from Bitcoin to stablecoin. And if we take a look at the price, I'm just going to make this a bit smaller so it's easier to see the price. But if we go right up there, the price, I would say somewhere around $18,000. Now, if we ride that in a stablecoin, then it's right here. And at that point, price is somewhere around $16,000. Okay, so basically, you sold Bitcoin at $18,000, you're buying again at $16,000. Now, this is a little one. This will happen every once in a while where you just have a little blip where it's not really gain or loss, or maybe you gain a little bit or lose a little bit. But then again, we're back in stablecoin until the price hits here, which is $11,000. So basically, you sold at $18,000, you're buying it at $11,000. But again, this is another little blip. So that sometimes happens. You may buy one day to sell again a couple days later. And then really, it's not until down here, this cross right here, where we would actually be buying back in and staying in for a while. And right there, the price is around $7,000. So what happened there? We sold at $18,000. We bought in at $7,000. Now, basically, you've more than doubled your position. You've almost tripled your position in Bitcoin. So if you had 1 Bitcoin in the beginning, you would have 3 Bitcoin now by doing this. And then what you do is you stay in Bitcoin until it crosses again to the bottom, which is right up here at $11,000. So basically, you bought in with $7,000. So now you have 3 Bitcoin that were, let's just say, okay, we'll just do the math on this. So you had 1 Bitcoin at $18,000. You sold it. You bought in again at $7,000 or so. Okay, so let's just say you have 3 Bitcoin now at $7,000. We'll say $21,000. Well, guess what? Those 3 Bitcoin, when you're selling them again, they're not worth $21,000 because now they're at 11.5. Okay, so those 3 Bitcoin are worth $33,000 or $34,500 at this point. So that's how you gain money using the MACD. And basically, the reason I like the daily MACD is because I don't have to trade that often. If we look at this, you trade once on December 19th, once on January 5th, once on January 9th, once on January 28th, once on January 30th, and then February 10th and March 7th. So basically, you're only trading a few times a month, but to be able to make this much money from doing that is pretty incredible. So let's get into a little bit more behind the MACD. The other thing that I should mention here, this histogram, you can look at it because the histogram tells you the distance between the orange line and the blue line. So that's all it is, an illustration of the distance between the orange line and the blue line. You can look at it. I don't really look at it that much other than just finding when there's a red line or a green line starting, because that would indicate that, I should have bought or sold at Bitcoin. So moving averages, just a definition real fast. So basically, it's a trend following momentum indicator that shows a relationship between 2 moving averages of security price. The MACD is calculated by subtracting the 26-period EMA from the 12-period EMA. And then a 9-day EMA of the MACD is called a signal line, plotted on top of the MACD line, which can function as a trigger for buy and sell signals. Okay, so that's the MACD. Now, one thing that I do, if you take a look at this chart here, this chart is a little bit different than the previous chart, okay? Not only the colors, but you can see it seems like there's a lot more reds and then a lot more greens and then a lot more reds and then a lot more greens versus this chart, which is a typical chart where we see red, red, green, red, red, green, red, red, green. And basically what this is just a different type of candles. These are the Heikin Ashi candles. I like to look at these because they tell us a little bit more about the trend. How you find them, you go up to this candle thing up in the top, and instead of using the regular candles that you would just select Heikin Ashi, okay? And just to give you a definition of that, sometimes it means average bar. It can be used in conjunction with candlestick charts to spot market trends and predict future prices. It's useful for making candlestick charts more readable and trends easier to analyze. All right, so I just like the way they look a little bit better. And one thing that I will mention, if we just take a look, we zoom in here at the end, okay, these 2 charts will actually be different. So if we take a look, we're getting there. Eventually, somehow. There we are. Okay, if we take a look at the standard candles, we already have a MACD cross a day ago, whereas the Heikin Ashi candles haven't yet crossed. So, I mean, this is kind of a judgment call. Do what you do, but be consistent. You want to find a winning strategy and be consistent with it. So I consistently use the Heikin Ashi candles, so I consistently do that. Okay, I don't switch back and forth between. Now, some other things that I like to do with the MACD, because this is the daily MACD. This is what I trade the MACD on. So basically when there's a cross, as will probably be happening in a day or so with the Heikin Ashi candles, this is being recorded before it's aired because I'm still kicked off YouTube for the time being, but this will be on when I come back. Basically, when that crosses, then I will trade. And another note, I don't trade the moment it crosses. I just check once a day. So basically, every day I'll check sometime during the day. And if there's a cross, then I trade. If there's not, I don't trade. I don't go checking all the time. This is just, I check once a day, okay? If there's a cross, I trade. If there's not, do nothing. So other things I find useful with the MACD. We have some other time periods we can look at the MACD. So another one that is one of my favorites is the 1 week MACD. Now, why is this my favorite? Because of a few things. So I'm just going to turn off the histogram because this can get kind of annoying to look at. It gets in the way of just looking at the MACD lines. So one of the things I found out about the weekly MACD is that when we have a tangent to the line, as we've seen there, and also as we see right here, tangent to the line, that generally indicates a pretty significant change in momentum of the market. Now, if we take a look here, this was pretty close to the top of the market, okay? And I knew at that point that Bitcoin price was going down, as it did. Now, again, here we have another tangent to the line indicating that Bitcoin price is likely going up. So those are two things I like to look at with the weekly MACD, but also we have another weekly MACD cross here. Now, these crosses are a bit lagging because instead of being on a day, they're on a week. So here, if you would trade these crosses, you would have bought in somewhere between 10,500 and between 93 and 10.5, which you would say somewhere around 10,000 you would have bought in, or you would have sold, excuse me, and you'll be buying back in Bitcoin right around 8,300. So it would have worked, but not as good as using the daily MACD. And one thing that I found, I have someone doing some back testing for me. He's actually creating a pretty awesome back testing bot. So hopefully in the next few months, we'll be able to debut that on the channel so you guys can check that out. But one of the things that I found, or that he found that was really good, is the best time frame for the MACD is the 2-hour MACD. Now this is taking a look at the 2-hour MACD. You can see there's a lot more crosses. Sometimes you have to trade a couple times in a day just because, you know, we're looking at the 2 hours. But with a bot, this could be a lot better. And I will mention, the gains are much higher. You have to trade more often, but maybe it's worthwhile for some of you to do that. The only thing is, I gotta say, you wanna be consistent. You have to be consistent across this thing. You can't go trading the 2-hour every once in a while, and then the daily, and then the weekly, and then the 2-hour. You wanna be consistent because that's how you actually make profits as a trader. Now, the other MACD I wanna talk about is the monthly MACD. Some people take a look at this thing. I think that the monthly MACD is such a lagging indicator, it's almost useless. Now, right now we see the monthly MACD is saying go into a stable coin from Bitcoin. But if we take a look at the last time it said to go from Bitcoin to a stable coin and then back, we would have one cross right here where the average of that is like $7,000, and then we have another one right here, the average of it is $8,000. So we would have actually lost money trading on the monthly MACD. So while we can take a look at that, I honestly don't really ever look at the monthly MACD. So in summary, what do I do when trading the MACD? I trade the MACD looking at Heikin Ashi candles on the 1 day. The default settings for the MACD, 1226 close 9. Again, you find it by going to indicators up here in the top left and then clicking on MACD. And you can change the settings of these. I've changed the settings just a little bit to optimize it for how I want to see it visually appealing, but this is pretty much what it looks like. When the blue's on top, you want to be on Bitcoin. When the orange is on top, you want to be in stablecoin. I don't margin trade because that's risky. Unless you really know what you're doing, you can lose a lot, if not all of your money. And even though some people, the most popular people on YouTube right now for cryptocurrency, are touting margin trading, that's because they're making $250,000 per month off of those affiliate links. okay? If you don't believe me, I'm gonna have a video coming up showing you that later, so stay tuned for that. That's the reason they're touting it, not because it's a safe thing to do with your money. However, there are some of you who, regardless of what I say, will want to margin trade. So there's one thing that I would recommend if you wanted to do that. Again, margin trading is very risky. So one of the top traders on TradingView, Jacob Canfield of Signal Profits, he retired from trading in his late 20s. He actually walks the walk and talks the talk, okay? When I say he retired from trading, it means he traded until he had enough money to where he didn't have to work anymore. Well, he created a margin trading course. So all you need to do is down in the comments, I will post a link in the comments, not in the description, in the comments, I will post a link. You click on that link and then go up top here to trading. And then all you want to do is click on margin trading signals. And he actually has a margin trading course where he'll teach you how to margin trade. And then if you want, he'll give margin trading signals. And you can use that because he's going to teach you how to margin trade safely. That's a very, very important thing. All these people touting Bybit on YouTube are not traders, okay? They're former BitConnect shills, and now they're Bybit shills, okay? You want to be taking your advice on trading from people who recommended BitConnect? Well, Sonny Decree did. He was one of the top people selling BitConnect, okay? Now he is touting Bybit along with a lot of other people saying Bybit because they're making up to $250,000 per month exploiting you. So I do not recommend margin trading, but if you have to, and some of you want to, and you want to margin trade, you can go ahead and do it. And if you want to learn how to do it safely and securely, definitely check out this course by Jacob Canfield. I'll leave a link down in the comments. So that is all for the MACD. I just want to make that video for you guys because you've been asking a lot about it. I had to remove all of my old videos because I was getting strikes on stuff from like a year ago. So I just removed them. I'll be reposting the important content, but really no links in the description, no yada, yada, yada. So all of that stuff. Thank you guys for watching. If you did enjoy this, do me a favor and give it a thumbs up. Subscribe if you haven't already. And then I will catch you guys later. Make sure to check out the Monarch wallet. Also, they are one of my sponsors because I firmly believe that they are one of the best wallets out there. Even one of the best cold storage wallets if you disconnect your phone from Wi-Fi and cellular. So check out the Monarch wallet. You can go to monarchwallet.com. Thanks for watching. I'll catch you guys later. It's good to be back. Love you. Peace.